Hi everyone, welcome. Thanks for coming along to our chat this afternoon. I know IR35 isn't the most exciting of subjects, nor is any sort of tax, but we're really hoping today you can leave with some practical advice and guidance to take back to your businesses on how best to deal with the reform. So we're not going to go into the nitty-gritty of the legislation and all the technicalities. Andy's going to give us a bit of background because I think it's just quite useful to have the scene set. But really what we're talking about today is the issues around talent shortages and how IR35 may be one of the reasons behind this, so how you can best deal with it. A lot have suddenly started referring to IR35 as a forgotten factor of the current UK talent shortage. And I think that's probably what we're going to go through today. So how we can make sure that it isn't one of the reasons. Everybody blames COVID, everyone blames Brexit. This is actually one thing that we can manage. So we can't really manage the other things. So what we really want to do is make sure that you've all got a good process in place, or at least some thoughts to take back to your business of how to get a good process in place. So before we start, a few introductions. My name's Nicola Heyman. I am the legal manager at Kingsbridge. Kingsbridge was started back in 2001 as just a traditional commercial insurance broker. In 2007, we launched Kingsbridge Contractor Insurance, so offering a specialist suite of insurances specifically designed for contractors. We've then gone on to develop a IR35 offering. So Andy and I joined the business back beginning of 2019 to help develop this, and we've since gone on to grow a team. We're now working with a large amount of end engagers and also a lot of recruitment companies. So I'll pass over to Andy to do a brief introduction of himself and also give us a bit of background.
Okay, I'm head of tax at Kingsbridge, particularly responsible for all things IR35 and employment status. Tax has been my life for 40 years. How sad is that? I started life in the old Inland Revenue when it was a good department to work for. I was head of tax at QDOS for 17 years and joined Kingsbridge. And I've been involved with IR35 right from the start, April 2000. And during that time, I've defended about between 500 to 600 contractors during IR35 inquiries, and literally most of those have been successful. So I hope I know what I'm talking about. So we're going to have a sort of whistle-stop tour, really, of IR35, given the time. So a bit of background first. The IR35 rules, they're anti-avoidance rules, and they were introduced with effect from the 6th of April 2000 in respect of services performed on or after that date. The measures were introduced to target workers who resigned from their job on a Friday, and then they came back and started work in a self-employed capacity on the following Monday, so in essentially the same role. And the name IR35, that's taken from the HMR then Inland Revenue press release in which the measures were announced. The rules are also referred to as the intermediaries legislation, and they're contained in the Income Tax, Earnings and Pension Act 2003, ITEPA for short. The rules target the perceived loss of tax and national insurance contributions to the Exchequer that may arise where a worker provides their services through an intermediary such as a limited company or a personal service company, or it could even be a partnership. And what they seek to do is say, well, if it wasn't for that personal service company, would you really be an employee of that end client, i.e. disguised employment? So where you've got somebody operating through a personal service company, there are, and there certainly were, tax savings to be made, because typically what a worker would do is they'd get paid gross by the end client, or they do get paid gross by the end client, and then they extract that profit from their company, typically through a small salary, probably below the national insurance limit, and then they top that up with higher dividend. No NIC on dividends. So that's where the Exchequer believed they were really losing out. So in deciding whether or not IR35 applies to a particular contract, it's necessary to determine whether a worker is genuinely self-employed or are they acting more like an employee. And now, unfortunately, we don't have a statutory definition of self-employment, so we are reliant upon a number of employment status tests that have been handed down to us through tax and employment case law, and have been developed by the courts. And to a certain extent, therefore, that makes IR35 subjective due to the differing interpretations by HMRC and, on the other side, the taxpayer of the status tests. Now, up until April 2017, the responsibility for determining whether or not a IR35 applied to a particular contract was that of the worker's personal service company. Now, that changed because the HMRC, and particularly the government, believed that it wasn't being policed properly, and there was too many contractors out there who were just saying, well, IR35 just doesn't apply, and not really actually thinking properly about it. So in April 2017, they shifted the responsibility for determining the status of a worker from the worker to the public sector. So where you had a worker who was engaged by a public sector body, it would be the public sector who decided whether they were genuinely self-employed or actually a disguised employee. It was only a matter of time before these off-payroll rules, the rules that were applicable to the public sector, were rolled out to the private sector. It was always going to happen. And following consultation, the rules were then extended to include medium to large size businesses. And that was as from 6th of April of this year. It was postponed, as it was originally due to come in on the 6th of April 2020, but because of the coronavirus pandemic, it got shifted a year on. Now, an organisation's medium or large sized, if it meets 2 or 3 criteria, first is an annual turnover of more than 10.2 million. Secondly, a balance sheet total of more than 5.1 million on gross assets, that's before liabilities, or an average of more than 50 employees. Hiring companies who don't meet those conditions are considered small, and they're not affected by the off-payroll rules. So should a worker be engaged by a small company, then it's still the worker who remains responsible for self-assessing their IR35 status. So therefore, well, we've now got a 2-tier set of rules for IR35. We've got the original rules that are contained in Chapter 8, Part 2 of ITEPA 2003, where the worker's responsible for deciding whether or not IR35 applies. And we've got the off-payroll rules, and they're contained in Chapter 10, Part 2 of ITEPA 2003, and that's where the hirer is responsible for deciding whether or not IR35 applies. Yes. So the off-payroll rules, where does the actual liability sit? So where the contractor is responsible for self-determining their IR35 status, then if HMRC decide they're caught by the legislation, then it's the contractor's limited company that's got to pay the resultant pay-as-you-earn tax and NI. That's straightforward enough. But where the off-payroll rules apply to a hiring organisations, whilst they're responsible for deciding the worker's employment status, it's the fee payer, typically an agency, and known as the deemed employer, who must deduct pay-as-you-earn tax and national insurance and pay that over to HMRC, along with employers' national insurance and any apprenticeship levy. But if, however, you've only got 2 parties in the contractual chain, i.e. the hiring client and the worker, then it will be the client who will take on that responsibility. But there are some circumstances, particularly in a multi-party contractual chain, where the taxation responsibilities can revert to the hiring client. Firstly, where the client fails to take reasonable care in assessing the worker's employment status, known as the Status Determination Statement, or SDS for short. Secondly, where the client fails to pass a copy of that SDS down the contractual chain In a tripartite contract, that would be the worker and the agency. Thirdly, where there's a failure to adequately respond to a worker's appeal against an SDS within 45 days. And then fourthly, where HMRC can't actually recover the pay-as-you-earn and national insurance contributions from a deemed employer, for example, because that deemed employer, that company, has dissolved, or HMRC's attempted to recover a pay-as-you-earn debt, and they're satisfied there's no realistic prospect of actually recovering that tax, NI and apprenticeship levy, then they may decide to recover that from the hiring client. A bit about the public sector, and you may have actually been aware of this over the last few months. It's been revealed through their respective annual report and accounts that 3 public sector bodies, the Department for Work and Pensions, DWP, Home Office and HM Courts and Tribunals Service, were found to have transgressed in their off-payroll rule obligations, and that led to substantial tax and NIC arrears, plus interest being payable to HMRC. So the DWP, they were landed with a tax and national insurance bill, plus interest of 87.9 million, and that's pretty eye-watering, and that covered the period April 2017 to April 2021. So that goes back to the implementation of the off-payroll rules for the public sector. Now, although that department used CEST, we don't know what areas of employment status they got wrong. The Home Office, they were presented with a tax and national insurance bill of £29.5 million plus interest, and that covered the period April 2017 to March 21, and that was for making incorrect determinations. In addition, they were also landed with a £4 million penalty for careless behaviour, but that was suspended for 3 months, and that was subject to certain conditions. Some of those conditions related to improved training of hiring managers, monitoring and assurance over compliance over IR35, not just at the point of procurement, but throughout the contract life cycle. But the Home Office actually expected to meet those conditions. And HM Courts and Tribunal Service, HMRC challenged the Ministry of Justice to revisit employment status determinations for workers between April 2017 and April 2020, where the Ministry of Justice, they'd previously concluded that their workers were outside of IR35 because they all had a genuine right of substitution. And as a result of those incorrect determinations, that department owed £12.5 million in tax and NIC arrears. The department, again, they used CEST, HMRC's tool, in making those status determinations, and their report stated that they applied the off-payroll rules with due diligence and care, taking a considered assessment of each contractor in the first instance. Hence, that's why no penalty was levied by HMRC. A bit about compliance letters. Again, you might be aware, in September of this year, it was reported that HMRC had started to send out letters to those businesses operating in the oil and gas and the finance and banking sectors to confirm that they are correctly operating the off-payroll rules. And the letters ask to understand more about the organisation's process for hiring contractors. Now, those compliance checks are being conducted in accordance with HMRC's briefing of February 2021, titled Supporting Organisations to Comply with Changes to the Off-Payroll Working Rules. And that sets out the department's compliance principles, and it's all about, education and support. And so whilst we were expecting there to be some HMRC compliance activity at some point in this tax year, the timing of those letters does seem to be earlier than anticipated, and the fact that the department has actually specifically targeted those particular sectors appears to suggest that HMRC consider there to be a more immediate risk?
Thanks, Andy. I appreciate that's a lot of information all at once, and we're kind of going on the basis that there's some knowledge, there might be really good knowledge of IR35 and some really basic knowledge of IR35. The point we're trying to get to, and Andy just laid out, there's 4 different ways that an end client could end up being liable with a tax bill, and he's also highlighted some numbers there, which makes everyone panic and go, we're just never going to engage with a contractor ever again. But we're kind of trying to weigh it up here. We're trying to demonstrate, yes, there are risks that are involved, but this is not a time where you want to be restricting your access to contractors. So it's trying to weigh it up and find kind of the best way of moving forward. So why has IR35 caused a talent shortage? All of the reasons that Andy just laid out, because end engagers like yourselves have gone, we're just not engaging with contractors anymore. And they've just made that decision. Some might have said, actually, we are going to get a proper process in place. They might have used CES, they might have used a different organisation. But there's no doubt if you're advertising roles as some inside and some outside, all the contractors are going towards the outside roles and not the inside roles. So we've kind of got 2 issues. The biggest issue is the fact that end engagers are nervous, rightly so, and so they have made the decision to say, we're just not going to engage with contractors anymore. So hopefully when we move on towards the end of the presentation, Andy is kindly going to explain to us how you can continue to engage with contractors, but do so compliantly and with as little risk as possible, because just making the decision to say no more contractors, potentially that burden is higher than saying, actually, we are going to engage with contractors, but we need to manage this risk somehow. So I've picked out this graph on the side just to make it a bit more relevant to everyone. I'm not saying anyone engages with HGV drivers, but everyone here is aware of the current or the previous HGV issues that we're having. What you probably weren't aware of is that IR35 had any sort of impact there at all. But you can see from this, over half of the contractors that took part in the survey chose IR35 as one of their reasons for leaving that sector. So I'm not trying to say it's the only factor, but it's certainly a key factor that you might not have been aware of. So it does need some serious consideration when we're saying, okay, we're losing all this contractor talent. If IR35 is one of the reasons, what can we do about it? So we've touched on a lot. Yes, IR35 is removing your access to talent, but making the decision to say we're not going to engage with contractors anymore also had other issues. It's not just about being able to access those contractors. It comes with an additional cost. So if you said, actually, we did have some contractors, or we were going to engage with contractors, but now we're going to take them on directly, they're now your employees. You've then got additional costs involved there. You might say, actually, no, we're going to put them through a recruitment company or a recruitment agency, or we're going to use an umbrella company. There are additional costs that are involved. Whether or not they're borne by you or the contractor, there are additional costs to consider. Employment rights, obviously, if they're your employee, they weren't previously, you've got that consideration. Same for agency workers and umbrella workers. They still have rights compared to a standard limited company. Talking around umbrella companies, I don't know if anyone in here uses them, but they've kind of grown a lot since the rules came in April. There are some good umbrella companies out there, but you need to be very careful. By saying no more contractors, but we'll use umbrella companies instead, isn't really a good way of looking at it, because you're potentially taking on an even higher risk in your supply chain, where you could have some unscrupulous umbrella companies, which are kind of in all the headlines at the moment, but thinking you've removed the tax risk because you're not engaging with contractors. So it's just making sure you do a fair assessment of your whole supply chain if you are going to start using other organisations. I've quickly touched on U-turns here, and I won't go into too much detail, but the fact is, when this happened in the public sector, we saw TfL, we saw NHS kind of backtracking. After a while, they said, do you know what, this isn't sustainable. I think Andy knows a bit more detail than me, but I think with TfL, they had a lot of contractors just walk out. They said, if you're not going to engage me through my limited company, we're not doing it anymore. So they had to go back, they got a proper process, and actually surprised themselves by how many contractors they did have that were genuinely working outside of IR35, genuinely self-employed.
Yeah, I think the classic one, Nicola, was HMRC themselves,
Oh, yeah.
because they had a number of contractors working on making tax digital, and then the rules came in for for the public sector, and HMRC just decided, well, all you contractors, you're now inside IR35, and I think nearly to a man they protested and down tools and said, you reconsider, and they did.
Yeah, we're already starting to see it in the private sector. So I think COVID and Brexit hasn't helped, but we are already starting to see some organisations say, actually, let's look at this again. We're struggling. Can we do this properly? And you absolutely can. So the point I'm trying to make through all of this is point blank refusing to engage with limited company contractors isn't the answer, but there are definitely changes that probably need to be made in your organisation, which we found, especially working with a lot of end clients, end engagers, that changes did need to be made. Everyone needs to look at their supply chain. Potentially there were contractors working in places where they'd been for 15, 20 years and were definitely acting as an employee and shouldn't have been doing that. So everyone's had to clean it up a lot, but just making that decision to say, we don't accept limited company contractors probably isn't the right solution going forward if you want to have access to the best talent that's out there at the moment. So how can you continue to access contractors compliantly? Hopefully Andy can touch on this a bit more.
Okay, so when the off-payroll rules were originally going to be introduced to the private sector in April 2020, we saw some businesses taking a decision not to engage with the legislation at all, but rather to declare that contractors must either work for those organisations via agency pay-as-you-earn or via an umbrella company. So by doing that, they were actually removing themselves from the off-payroll legislation completely, but what they were doing was driving contractors down a pay-as-you-earn route one way or another. Now, adopting such a blinkered approach, in my opinion, it deprives an organisation of securing the best talent, because contractors enjoy the freedom of self-employment, and if their client isn't even willing to consider that possibility, they're likely to seek out clients who are more pragmatic in their approach. Now, I'm not suggesting that self-employment be falsely manufactured, but where it's a genuine possibility and the conditions are right, then it should be properly considered, as it will make organisations much more attractive to the talent they're seeking to hire. And it will also save themselves an awful lot of employers' national insurance. Another consequence of blanketing contractors or banning self-employed contractors is the loss of skills from the market completely. The Association of Independent Professionals in the Self-Employed, IPSI, they recently carried out research, and they found a third of contractors have closed their companies, either for retirement, moved into permanent roles, or they've begun contracting abroad, or they're simply not working at all following the IR35 reforms. Now, perhaps if their clients had been more open-minded, they wouldn't have been driven offshore or the like. So what makes a robust status determination? In establishing whether or not IR35 applies to an engagement, it's necessary to examine the contractual and, most importantly, the working arrangements between the parties, and then applying these employment status tests that I talked about earlier. Now, there's a 1968 case, and that's nearly as old as me, of ready mixed concrete, and that established that a contract of employment exists where certain conditions are met, 3 conditions. And the case provides what we call the trinity of employment status, and that criteria, believe it or not, it still decides the majority of status cases. So first criteria, is the personal service of the worker a requirement of the contract? Secondly, are there mutual obligations between the two parties? And then thirdly, does the client have a sufficient degree of control over the manner in which the worker carries out the services? So theoretically, answering no to any of those I've mentioned should be sufficient to give rise to an outside IR35 determination. But it's better and safer to have at least 2 pointing towards self-employment, and those 2 should preferably be control and personal service. There are, however, a number of other important tests to consider when building up an overall picture of the relationship. Does the worker provide their own equipment? What level of financial risk is the worker exposed to? Is the worker operating a genuine business? Is the worker integrated into the client organisation? And then there's some minor tests, and on their own, you know, they don't actually hold great sway, but together they might help tip the balance either way, where there's sufficient doubt over the status of the worker. And after you've given careful consideration to all of those tests, it's then necessary to stand back and decide what you are looking at, i.e. a genuine self-employed worker or a disguised employee. Now, in making status determinations, I've alluded to earlier that the hiring client has to take reasonable care in making these determinations. As failure to do so, it's going to render them responsible for the deduction of tax and national insurance and paying that over to HMRC, along with any apprenticeship levy. Now, there's no statutory definition of reasonable care, but HMRC have kindly set out their interpretation of the concept in their employment status manual. And reasonable care means clients should act in a way that would be expected of a prudent and reasonable person in the client's position. Now, HMRC recognise the circumstances of clients completing a status determination statement will vary greatly. So a small organisation may only have to have sort of very limited processes in place. Multinational organisations, HMRC would expect much more thorough processes. So HMRC expects each client to carry out a complete and thorough assessment or determination and preserve sufficient records to show how that decision was reached. So not only will a failure to take reasonable care render that client liable for tax and NI, but such behaviour could lead to the imposition of penalties depending on the nature of the behaviour, i.e. if it's carelessness, that penalty can be suspended, but if it's more deliberate, for which there's no scope for penalty suspension. And then really concluding a bit about CEST. So the Check Employment Status for Tax tool, CEST in short, that's an online tool developed by HMRC. And it asks a series of questions on most of the employment status tests. Now I say most because it doesn't address the issue of mutuality of obligation, which is a key test. So once all the questions have been answered, the tool then provides an inside or outside IR35 status determination, but not each and every time. And now between 25th of November 2019 to 31st of May 2021, that tool was used just over 1 million times, and it produced the following results. Nearly half a million deemed outside IR35, just over 308,000 deemed inside IR35, but just over 210,000 were undetermined, so it didn't give an answer. Now, CEST is anonymous, and HMRC don't keep a copy of the answers. And now many organisations have chosen to use CEST as it's free to use. And you know, they're under the misconception that because it's been developed by HMRC, then it must be 100% accurate. But that's not completely true, because HMRC are not the supreme authority on employment status. If they were, they wouldn't have lost so many IR35 cases in the tribunals and courts. Now, HMRC say they'll stand by the results of CEST, provided the information used to answer the questions is accurate, the tools used in accordance with their guidance. There have been no subsequent material changes to the arrangements, and the results not been achieved through contrived arrangements designed to produce a particular result. Now, in my opinion, there are superior status tools available out there, such as Kingsbridge's own tool, that are more thorough and more accurate, and they demonstrate that reasonable care has been taken. It isn't always necessary to use an online tool, although it's quicker and it's more cost effective. As an alternative, you could carry out the status review manually, but it might be more thorough, but it would also be more time consuming.
Thanks, Andy. I'm conscious we're very close to the end of the presentation, so I'm quickly going to whiz through this last slide. Andy's touched on CEST and made his feelings quite clear about it. He actually did it quite PG. But there are other assessment platforms that are out there, some of them being fully automated, some of them being fully manual. Obviously, the fully automated ones come with the issues that there's no one behind it, and we can't always rely on the determination that's coming out, but they are quick. The fully manual ones, great, they have the expertise behind it, but can you wait 1 day, 2 days, 3 days to be able to get a result? So what we developed was a hybrid approach of both. So we have our IR35 team that is behind the tool, but it is also automated, so you can get answers quickly, but you're not left with any sort of inconclusive results because the team would pick it up and make sure that they kind of develop it. So I touched on at the beginning that all of our insurances are underwritten by Zurich. So even if you have a great process in place, what nobody can guarantee is that HMRC are going to come knocking at the door and say, we don't agree with the conclusion that you came to. So although you could show them all of the processes, we cannot guarantee, yes, we can absolutely stand by this. If you've got an outside determination, HMRC will agree with it. They may not. So for organisations that are very risk averse and want kind of a complete package to protect them, there is insurance that is available. So we offer an insurance product that covers not only the fee payer, but it also will cover the end engager. So you still need to make sure you have a proper process in place. The insurance isn't there to say, carry on engaging with as many contractors as you want and just get some insurance. You need to have a proper process in place, but there is insurance available if you want that added layer of protection to say, do you know what, if HMRC do come, we know that we are backed up by insurance if they do disagree with the status that we came to. So we've currently carried out over 26,000 assessments via the tool. I think we've had over 3,500 clients that have already benefited from a status determination. So we've already had a lot of usage out there. Our stand is directly behind you, the big bright yellow one. So if you have any questions around the tool, around the insurance, but if you have any questions around IR35 in general, I know it was a very quick talk. Andy and I are around to take any more kind of detailed questions, but the team are at the stall, want to have a demo of the tool or anything like that. So thank you everyone and thank you everyone online for coming along today. If there are any burning questions, I'm happy to take them, but if not, just head over to the stand and we can deal with them then. Thank you.